One of the questions I get routinely is whether a savings account is still worth it. The interest rates are really low, and there's a little bit of inconvenience associated with a savings account. Maybe a checking account's better, and it just doesn't matter. So I'm going to give you 4 return boosting tips and maybe a little bit extra on how to make the most of a savings account and where a savings account makes the most sense. Most of us try and set aside some money for emergencies or the proverbial rainy day. But a lot of us don't really have a good routine for doing that. And one of the easiest ways to be able to set money aside is to set up a savings account, make it a little bit difficult to get to, which means no debit card, no checking privileges, and maybe even at another bank. So you have to actually go get the money or transfer it online over to your bank account where you're going to be able to spend it. So in that particular case, savings accounts are pretty useful, but they don't pay much interest. And it's very difficult to even get a rate of return on them that's going to equal inflation, especially given the current economic environment and interest rate environment. But there's some simple strategies that you can use to get the most out of your savings account besides setting it off to the side, using it for your emergency fund, setting it in another financial institution where it's a little bit difficult to get to, and not having checking privileges or a debit card for it. And sometimes banks won't tell you these things that I'm about to tell you because they don't really want to impact their profitability by giving you some of the more advantageous components. So the first one is look for your online savings accounts. There's a number of them out there. Capital One has a fairly good one with a decent interest rate, and that's the one that I personally use. They're a fast-growing trend, and really for good reason. You get the benefit of earning competitive interest rates on a deposit without having to worry about going to a specific location or being in a specific area. The online banking and online savings accounts are set up for remote access and remote management. Some of the banks that they're getting better, but some of the banks' online service portals are pretty janky. And so the online banks tend to be very good with their online portals. And with an online savings account, you might be able to earn 1% or more, and that's going to be a dramatic improvement over what you're getting at the local bank or even credit unions. And they're also FDIC insured as long as you've got a U.S.-based savings account. And so if something goes bad with the bank, you're covered up to $250,000. Little word to the wise here, there's a lot of things online about going offshore and offshore asset protection. That adds a whole layer of disclosure for the IRS. So, unless you're a real high roller, it probably makes sense to stay here onshore, and there's other tax advantaged ways to do that, and asset protection ways to do that. Without having to go offshore and deal with some of the provisions that the IRS might get you with. So an online savings account with a domestic bank here in the United States makes sense. Number 2, in order to get the most out of your savings, you should be looking for higher interest rates. Believe it or not all savings accounts are created equal. There are actually some that offer a lot better interest rates, and those ones are going to help you grow your money a lot faster than others. Saving as much as possible can give you a big boost at the end, even if it's just a little bit more return. That compounding effect of between 1% and 2% goes a long way over a 10 or 15 year time period. And so, shop for that best interest rate, recognizing that, up to $250,000 it's FDIC insured. And really the purpose of that savings account is likely to hold a very short term objective to be able to go, if you're saving for a specific purchase over the next, 6 to 12 months, and so you can't take any volatility in the return, or it's your emergency fund, setting the money aside there is a smart move. Other than that, there should be other places where you're investing your money, but because that's going to be, likely under that $250,000, shopping for the best interest rate over time is going to make a big difference. And so shop for that best interest rate, even if it's not at a local bank. And you're likely to find a lot of those online where the overhead is lower. Number 3 is look for accounts with opening bonuses. If you're looking for a way to manage your savings, look no further than accounts with high opening bonuses. And there's a lot of the internet accounts that will go, you deposit $1,000, we'll give you $50. And that's a 5% return right there, bang, right into the account. And the reason they're able to do that is they've got, on the other side, if you think about a Capital One, they do a lot of auto finance and other subprime lending, and so getting those deposits, they're able to put those to work right away on the other side of their ledger by making loans. And so as a result, they're in a good position to be able to provide those online accounts with opening bonuses. So look for opening bonuses. A lot of banks will offer those accounts in hopes the customer stays with them long term as well. So, they give you that opening bonus, and then, over the next couple of years, you're staying there. If it's a Capital One, for instance, they're out loaning that money on the credit cards and subprime auto at, double-digit interest rates, and they're paying you 1 or 2%. They're doing fairly well. You're doing a lot better than you would be at the local bank. So it's a win-win, or at least a you don't lose as much situation. The longer those guys have your accounts, the more profit they make. And if that interest rate plus bonus is a little bit better, the better off you're going to be. And number 4, every month the interest on any money that you have in your savings account gets calculated, and it gets posted to your account. And sometimes knowing when that is can be a psychological bonus to you. So, being able to time your deposits so that, they're getting the full month's worth of interest, and then that interest is dropping at the end of the month, can give you a psychological boost because you see that interest growing every month, and it feels good to see the interest going up. And a lot of times just a little bit of a psychological boost, getting that snowball going, getting that momentum going, to make all the difference in sticking to a savings plan. So kind of know when that interest is going to drop into the account. Try and plan your deposit, 25, 28 days prior, and you'll see that number kind of rising a little bit faster. And again, it's a little bit of a game, but for your psychology, but it really does work. I've got a couple advanced savings techniques as well that I'm going to share here. Normally, I would say, look, just get your emergency account set up, get that savings growing, and then you can kind of move into some of the advanced savings techniques. But I'm going to talk about a couple here, just because you may be in that position already. So you may want to look at a CD once you've got your emergency account set up and you're kind of rolling along toward a short-term purchase. CDs will offer you higher interest rates, but they restrict your ability to withdraw the cash. And so they normally have a time period attached to them, whether that's 30 days, 60 days, 6 months, 1 year, 3 years, 5 years. And you can utilize a CD. I normally wouldn't utilize one over a year long, just because the interest rates right now, the interest rate environment and the yield curve is so bad for long-term savings that it doesn't make sense. But if you're looking at, you're putting money away and you're not going to need it for a year, and you're saving, for instance, for a new car, for redoing your kitchen, and trying to set money away, and you've got a chunk of money that you're going, okay, I'm going to use this a year from now to go buy that those new appliances or that new car. You can put that in a CD that's got a 9-month or 12-month maturity on it and get a pretty decent bump on your interest that you're going to earn on that versus a savings account. So if you know what the timeline is, and you're really sure about what that timeline is going to look like, you can go with a CD and kind of bounce that return up. You don't want to use a CD for an emergency fund, because emergency funds, you can't really time when you're going to need the money, and that money gets locked up, and the penalties for early withdrawal on a CD can be pretty sizable. But for a specific purchase where you're saving the money and you can't have fluctuations because you need that money in the short term, a CD might be the right way to go. The challenge with savings and savings in our current environment is you really don't see a lot of progress. You might you might need a $15,000 emergency fund. You set that aside, and you're just watching it go up by $1, $2 a month, and you're like, oh my Lord, this isn't really feeling great because the interest rate you're getting is, 0.1%, and it's just slowly ticking up. Take a look at alternatives. Take a look particularly at those online banks. The other advanced technique is to look at some of the online money market funds that you might be able to find at Vanguard. And again, I use Vanguard personally, where they've got very low expense ratios, and the money kind of sets aside, and you can get a little bit higher rate than you're going to get on a local bank savings account. It can be frustrating, but having that money set aside for an emergency is really important, and being able to maximize that return over time makes a big difference. So our savings account's worth it for the right purpose, which is an emergency fund, or for very short-term needs that you're saving for. They can absolutely be worth it, but go shop around, try and find that best rate, and utilize the savings account for what it's designed to be used for, and don't expect that the savings account is going to get you where you need to go on your drive to FI. Until next time.